Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 24th of September, 2019. We got markets on edge, specifically Amazon, and some other tech stocks which came under fire from a news report that the government might be cracking down on some technology or at least social media names. Amazon, Facebook, and others are in focus. But let's start our discussion on this 3,000 point in the S&P 500. So our S&P futures, we have another session or another event where the market's turning, or at least attempting to turn down away from resistance. We see a consolidation taking place, a trend line breaking. We can draw the similar trend line up here, which also serves as the 20-day exponential moving average. It's green. So each of the most recent times, at least, well, back into 2018 and 2019 once, 2019 twice, 2019 three times, we've seen the market trade even lower. So we are carefully watching for that outcome for a departure or a sell swing up against 3020, 3025, and at this point, 3000. But we aren't doing a broad market update in tonight's video. We're talking Amazon, and specifically Amazon on the edge of a cliff. So drawing a trend line here, we see 1745 or 1740, really the zone at this point, is the critical support point. If this fails, and we are looking to fail, but right now it is a critical if-then pivot for Amazon shares. And of course, not so much so goes Amazon, so goes the market. We'll look at other tech names in a moment, but just know that if we do not see a bounce, we probably will see a departure swing or a sell swing. And that will give profits to bearish positions, in-out spreads, verticals, or any other type of put positions or calls that may have been sold above the market prices. So that's how we'll focus our attention on your trades or playing a departure or fall off the cliff for Amazon shares. Like the S&P, we have seen a trend line break, and Amazon has remained in this rising parallel trend line channel, but it has broken beneath it and is stagnated at this 1740 or 1745 per share level. So going in the future, we'll take a look at option products and see if there are positions for a move beneath them. I have the whole list put out here, and this is the most recent. This is October. We can see our volatility charts. Roughly 27% implied volatility peaks toward the end of October. Nonetheless, we can see how the grid plays out in Amazon shares. We can also see that on our charts if we take a look at our volatility grid. And that just shows the probability of expiring in the charts. So taking a look at the daily chart of Amazon, we can see that we have a relatively wide grid. If we extend these trend lines, the probability of expiring cone, well, that's really taking place in the lower side of the trend line. So implied volatility is creeping to the upside. And again, those prior times we mentioned in the S&P, mid-2018 and two time in 2019, when Amazon shares tumbled, so did the S&P. And of course, so did the Nasdaq. So if you are watching just one stock, maybe not trading Amazon, but at least watching it, this should be where your focus remains. So Amazon does have that support shelf, but it has broken trend lines. Red or sell or bear volume has picked up, and that is concerning. So that's where my attention will be this week and into next week. Will Amazon hold support at 1740 per share and thus bounce up to maybe 1850, still a wide range, or break to 1700, which is the spike reversal low, V spike, or violent volatile spike from mid-year, and then go even lower? Downside targets will include about 1600 for the shares. We can also look at other tech names. I still would focus on Amazon as the clue. We do have a short position, or at least a short call, or a short call as an analysis piece for Google shares. And that is against 1240 on the daily chart. We are seeing divergences in bull volume, momentum, and the most recent bear candles are sell candles or sell volume. We also see the pickup in volatility for Google shares. So it even though it is not like Amazon at the prior lows, it is into resistance with a probability cone or probability of expiring cone of going down or trading back toward 1150. Now, one stock, if you want to see what the future for Amazon shares might be, we can look at Netflix. And we also had a position discussing a sell swing potential if Netflix, in prior videos, ultimately, if Netflix stayed beyond or under 300 per share. And that was short sell positions into the underside of 300, which is a round number level, but it's also our falling 20-day exponential moving average. So Netflix held support at 285, but 1, 2, 3, 4, 5 days on extremely high bearish volume has taken us to the lower target, which is about 250 per share. So that's a good trade that those who joined into a sell swing or otherwise put position or long premium going short, at least to the downside in Netflix. And its implied volatility is hitting a brand new high just about here for 2019. So keep that in mind if you are trading options. Probably do best as a seller of premium because that cone is wide. Other stocks maybe not be as impressive as Netflix, at least in the tech name. We can take a look at Apple, which had its earnings or had its news event, but also a short play up against its resistance into 220 per share. So we can take a look at all these names in conjunction with the S&P and again discuss this mid-year sell swing, two of them, and the potential for a third to take place. I still think the focus is on Amazon, but there are other names to trade. We can include the XLK itself, which is in a rising parallel trend line channel, threatening to break 79.50 because it's already broken under 80 per share. So in all these names, do additional research, look at the option chains and positions going through the remainder of this quarter, which is September, this week, and as we start October. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for September 24th, 2019.